Good morning and happy Friday, everybody. Welcome to the last pre-market prep session of this week here, January 12th, 2024, the first full week of trading in the books. And I'm excited to get after it here. Let's see. Oh, yes, most definitely. Hope everybody had a great night's sleep. Got it in this on a nice little streak of getting back into running, which is nice. I'm not gonna lie, I had been taking the easy way out, right? Holidays backing off, but getting back on the train, and it feels good because there's so much that goes into successful trading and successful execution in your job and as a parent and as a sibling and all that. And a lot of it is, you getting out, getting outside, getting that fresh air, getting that living oxygen that's coming, out of the trees as opposed to the recycled oxygen in the building. All of that is super key and super important. I feel like I'm going to be putting an even bigger stress on that this year. Because that's what it comes down to. We're only here for a little bit, so we want to make sure the time that we spend it full of life and invigorated, as opposed to kind of downtrodden and just not exposing ourselves to what we need in order to have that divine connection to the earth, right? To feel good and feel fulfilled and all the other hustle and bustle. But let's get into it. We're starting a little bit late because YouTube wanted to throw a fit, but we're here. I'm grateful for it. I'm excited to cap off the final trading day of this week, right? First full trading week. Happy to be back at it. Make sure you comment 1 in the chat, signifying your intention to get 1% better by the end. We're trying to do each and every day here, and if you can do that, you can pat yourself on the back. So you speaking a great job. Let's get to it. Our top news: ready, set, earnings. For earnings season 4, the biggest U.S. banks will kick off the festivities this morning with results from J.P. Morgan Chase, Bank of America, Citigroup, and Wells Fargo. Keep in mind that while the potential for rate cuts later this year spurred a rally in bank stocks in late 2023, Q4 results should reflect peak interest rates, putting pressure on deposit costs, net interest income, and available for sale security portfolios. And that was something that I feel like I really wanted to hammer home yesterday, because you guys know, for me, BAC is something that I've been hammering heading into 2024. And I love Bank of America because, number one, they've got cheap contracts, so it doesn't cost a lot. You're going to do something like play earnings. In terms of banks, this is something I discussed as well, about how you're looking to see the earnings reports moving forward in 2024 look a lot better, but that's not going to be reflected in this one, right? Interest rates haven't started to drop. There were already low expectations coming into it. So if those expectations were met, then you'll likely see a drop, right? Because that's just what's likely to happen. Now, if the bar was set really low for Bank of America and then they tripped and fell over it, then you can see the stock start to push. Now, I personally had a bullish stance on that, but it was a very small stance, right? Taking a portion of profits. So I'm fine if Bank of America wants to do away with it. But one thing I'm completely adamant in is those long-term calls there, because those are going to be beautiful. And any type of selling that we get, I don't anticipate that we see, even if they do miss, that, we see some type of like 5-6% drop, something along the lines of like less than 3%, right? Seems really in line. And just let the longs ride, and any shorts, right, that you're fine with risking. You're fine with flushing those bad boys down the toilet, and that's cool, right? But that's with any earnings play. When you wake up in the morning, do not bet it on earnings. And that's, as we, especially into big tech earnings, because a lot of people are going to be like, look, like, oh, this is at all-time highs. This is at all-time highs. They have to do well on earnings. They don't, right? They definitely don't. And that was something I talked about last night on the Q&A session, which is that idea that a lot of times too, companies will try and set the bar low, heading into the year, so that it's easy to beat, right? To beat throughout the year. And you look so much better. It's like, again, if you tell your, parents, hey, I'm expecting to get like maybe, C's, 1D on my report card, like barely pass, and then you get, all B's and 1A, and you pass, relatively easily. That's a huge surprise to the upside. But if you say, hey, I'm expecting to get all A's and pass easily, and then you get, 2 A's and 2B's, then your parents are like, what happened? I thought it was going to be all A's, right? So the results are really determined by the expectations. The reactions are determined by the expectations. So a lot of companies like to set the expectations low headed into the new year, so that, especially into a year where you could see companies crushing it, they can really seem like they're going above and beyond with their reports. So what to watch? Expect some incremental NIM, net interest margin pressure for the quarter, but abating from here, Morgan Stanley analyst led by Betsy Grasick wrote in a note to clients. Quote, this quarter, we saw the first evidence that deposit price competition is easing as banks began cutting offer rates for new CDs over the past month, down by 8 basis points in December, which should benefit NIM starting in 1Q24. Also, keep an eye on the outlook, revenue, expenses, credit quality, and capital returns, as well as one-time charges from things like portfolio reevaluations, costs from Basel III endgame requirements, and replenishing FDIC funds, which can skew Q4 results. Most of the big banks are expected to post lower earnings than a year ago, so the expectations are already lower coming into this week, with JP Morgan being a notable exception. It's expected to earn $3.61 per share in Q4 2023, compared with $3.57 a year ago, while Goldman Sachs is expected to earn $4.27 per share versus $3.32. The year ago figure has significant one-time charges. Most lending will still likely be strong or stable, with commercial industrial loans rising after multiple quarters of weakness and real estate lending turned positive. In terms of the investing angle, attention has shifted to the Federal Reserve's anticipated rate cuts, resulting in the KBW Nasdaq Bank Index soaring 26% since the end of Q3, outpacing the S&P 500's 11% increase. Note that the 10-year U.S. Treasury yield has eased. Bank stocks have risen. For those looking to navigate the banking sector, blah, 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 they go on to plug a lot of articles and things like that. In terms of global news, retaliatory, and there were a lot of different companies that reported, so we'll dive into that, as I get into the Loom video analysis to start the day. But since we're running a little bit behind, I just want to go over the ones that did report. It was JP Morgan Chase, Bank of America, Citigroup, Wells Fargo. So I'll go do technical analysis on all those as we dive in, but I want to make sure we get through what we have here this morning. In terms of retaliatory strikes, oil prices are responding to the U.S. and British airstrikes in Houthi-controlled areas of Yemen, with West Texas Intermediate climbing 2.4% to $73.71 per barrel early Friday. Shipping stocks also rose during the pre-market session. Quote, these strikes are in direct response to unprecedented Houthi attacks that have endangered U.S. personnel, civilian mariners, and our partners, jeopardized trade, and threatened freedom of navigation. President Biden declared, adding that he would, quote, not hesitate to direct further measures if necessary. Reacting to 16 airstrikes that hit radar installations, storage sites, and missile launchers, the Houthis pledged to continue targeting ships around the Red Sea, saying, quote, any American attack won't go unpunished and would elicit a big response. This is exactly what all these, reels the past few days have been about, this escalation of tensions, and it's really causing a divide. These Houthi rebels, a lot of people, recognize Yemen as being heroic in this endeavor. Some people are saying, hey, like they are, peacefully, because they are disrupting these routes, but they're doing so peacefully. They're disrupting these routes, but a lot of people are like, they're standing up for Gaza. So it's, there's a ton of divisiveness going on right now, and everybody's got another opinion. It's not my job or any of our jobs to parse through, the dynamics of this, the justification of it, just that it's happening and what we need to be doing in response, right? That's the thing. It's not like, oh, I have to go through all these moral this and moral that. Like at the end of the day, what's happening is happening, right? And it affects us regardless. So we have to make sure that we are offsetting those effects as much as we can by making moves in the market that can compensate for that. So it's just one of those things where it's a definite escalation, right? And that's what we've really been predicting and looking out for. And the Houthi rebels are also, saying that they don't plan on backing down and that they, this won't go unpunished. So we'll see what happens. If there's one military I wouldn't want to go up against, it is the U.S. military. People can say that the U.S. military acts out of greed in its own interests. Everyone that's human acts out of greed in their own interests. It's part of humanity, right? Whenever something has an expiration period or time clock, right, everybody's going to act within their own interests. So it's one of those things where it's like, I understand it. Is it right? No. Do I understand it? Yes. Right. I understand it because that's how things go. And once you kind of know how people work, you don't expect them to work any differently, right? I'm not going to expect you to work contrary to your nature. You know what the American government is about, right? If anything, I'm just going to ally my interests in the same direction to make sure what I care about is compensated for and taken care of, right? So if you want to, make a big difference, you can go ahead and make money off of what's happening in the market and then go and send that money over to, charities and relief efforts and whatnot in Gaza and in the Middle East, right? And put your money toward making that real difference. But I feel like that's the way to go about it, right? Is to fight fire with fire, fight money with money. Because at the end of the day, you yelling from outside of the club, not going to reach the people inside of the club. In terms of automotive news, dumping EVs, electric vehicle stocks are still under pressure after Hertz Global, ticker HTZ, said it would cut its EV adoption losses by offloading a third of its global fleet to buy gasoline-powered cars. We were just talking about this yesterday and how apparently that wasn't going to be the case, and literally, nope, that's the case. That'll put 20,000 EVs up for sale, including those from Tesla, in response to weak take-up and elevated repair costs. The decision adds to growing EV demand worries, which are already amplified by pullbacks in production targets. What about the rest of the fleet? Hertz plans to improve profitability by providing more charging stations and making it easier for customers to acclimate to an EV rental. I don't get like what the point was in the beginning. Was it like a tax cut ploy? Was it like what was the goal with buying a bunch of Teslas if you're Hertz? I don't know, right? I also didn't look deeply into it, but it's like if it's for tax purposes or something like that, cool, I get it. But personally, I don't care if I'm going to rent a car if it's an EV or a gas powered vehicle. Like that's just me. Maybe more people. Maybe if this was like Hertz in LA and everybody's like super conscious about that, and I do want to save the world and all that stuff. I'm just being frank, right? If I need a rental car, I need a rental car. I don't care what it runs on. So yeah, I mean, nobody could have anticipated this. Like Teslas are annoying to fix, and it takes forever for the parts to come. Like I feel like any normal person does that. So if I'm looking at making a move, for a major company, or I guess I'll put major company in quotes because it's Hertz. If I'm looking at making moves for a major company, am I going to purchase 20,000 Teslas? Probably not, if I had to say. But this is definitely something that is affecting Tesla, right? And I feel like you go through these smear campaigns and glorification campaigns with Tesla where they're glorified and edified, and Musk is, the best thing since sliced bread. And then, the past 2 weeks has been he's on drugs and da 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 da. Like this is happening on Twitter, and Hertz is returning all the Teslas that they bought, right? All this stuff. So it just goes through these news cycles that drastically impact the stock, right? It's kind of like a rock star type of stock where it's like there can be amazing headlines, it's like Justin Bieber or Chris Brown or something like that, where it's like some headlines can be amazing and some headlines can just smash you down into the dirt. So whenever you have the spotlight, this is what happens. People also love to see you crumble. And that's just the reality of fame, right? People love to see it get torn down. And it's also just news, right? Fame and news that'll get you. But yeah, if I had to guess, I'd probably say the majority of these people who are like CEOs are doing something. You don't work 50,000 hours a week and then like be sober. If I'm just being honest, like that's not me. I don't want that to be my life. But this dude runs Twitter, he runs Tesla, he runs everything. Yeah, he's probably hopped up on Adderall or something like that. I've got no idea. But you've also seen him speak, right? It's one of those things where I felt the same way with Liver King. I don't know if you guys are familiar with Liver King. Big guy, blew up on social media, obviously on steroids. He has like a supplement company, but like you have to know that looking at that guy, he's not like that because of his supplements. He's like that because of steroids. So it's for entertainment, right? It's the same thing with like Musk. I feel like a lot of what's said and what happens, like this guy is obviously not completely sober all the time. Like, have you seen him speak? It's just one of those things where it's like you accept that as it is, just like I accepted Liver King for being on steroids, right? I know he's on steroids. It is what it is, right? The guy is freaking huge. It's the same way. It's probably something, yeah, the dude sounds like he's on mushrooms every time he talks. If that also, kind of leads to some of the breakthroughs that we've been seeing, like being able to provide internet to all these places that haven't had it and establishing, a nationwide and global charging network and all that. It's kind of like everything. Take the good with the bad. In terms of crypto going live, the first spot Bitcoin ETFs debuted on the U.S. exchanges with a roaring start as more than 4.6 billion worth of shares changed hands on Thursday, propelling the top cryptocurrency above 48K. Grayscale Bitcoin Trust saw the largest trading volume at 2.3 billion, while BlackRock's iShares Bitcoin Trust, ticker IBIT, and Fidelity Wise Origin Bitcoin Fund FBTC saw over 1 billion and 688 million in trading volumes, respectively. While some analysts expected up to 100 billion in Bitcoin ETF flows this year, many on Wall Street believe the investment is too risky, including Vanguard and Merrill Lynch. Yeah, there were a lot of conflicting headlines yesterday. I saw this, right? More than $4.6 billion worth of shares changed hands on Thursday. And, this, that, and the third was occurring. And then I also saw that there were like other funds or platforms or whatnot that were like banning their customers from investing in these ETFs. So it's just like the tumult involved with crypto continues. I feel like if you want to be exposed to Bitcoin, just buy Bitcoin. Like I don't even know what the point is of a Bitcoin ETF. It's like I get that you get institutional exposure, but don't you not want institutional exposure? And I get it that involves people can get in their 401ks and all that stuff, but that's just part of it being further institutionalized. So I feel like if you want Bitcoin, stop being lazy and go purchase Bitcoin, right? Just purchase Bitcoin. It's not that hard. You can watch a YouTube video, but like I just think it's weird to like go and buy a Bitcoin ETF instead of just buying the Bitcoin. Um, yeah. So that's where I'm at with it. But it's one of those things where it's fought by so many in institutional adoption. And I believe the core ethos of it is to not be institutionalized. So there's just this weird dynamic there. I don't know how to feel about the whole ETF approval thing. Like, is that further away or closer from what was originally envisioned for Bitcoin? Um, don't know, right? But fun conversations to be had. In terms of today's markets in Asia, Japan, we're up 1.5%, Hong Kong down 0.4, China down 0.2, up 1.2%. In Europe, the footy in London up 0.8%, Paris up 1.1%, Frankfurt up 0.9, the Dow up 0.1, S&P down, NASDAQ down 0.3, crude up 0.4%, gold up 1.4%, Bitcoin down 1.7% to $46,069. We get PPI data or got PPI data at 8:30 a.m. I don't have Thinkorswim up yet, so I have no idea what's going on. That's loading in the background. But PPI data measures before the producers, so for the producers of goods, how it is fluctuated. That's going to be important. We got CPI data yesterday. It was worse than what is expected. PPI and CPI don't have to be the same or go in the same direction. So PPI could be. Who knows? We'll see. But that already came out. In terms of what else is happening, CPI comes a little hotter than expected, driven by housing. Tesla hikes pay at U.S. factories following union efforts. Yeah, another piece of negative info for Tesla, right? The pay going up, that's bad for the bottom line. Hertz getting rid of the EVs. The FAA formally notifies Boeing, ticker BA, of probe in 737 MAX mishap. Airbus sets record for orders on surging demand. AT&T, Verizon dip as EPA seeks meetings on lead cable data. DocuSign, ticker DOCU, jumps amid buyer interest from two PE firms. China-U.S. relationship faces a test as Taiwan elects new leader. Amgen, ticker AMGN, may be evaluating bid for Cytokinetics. And then Apple adds Wanda Austin to board Al Gore. So there's been too much AI talk. I read Al as AI. Al Gore and James Bell to retire from Apple's board, and then meet the contenders for a casino license near New York City. So that'll take us out. First full week of trading in 2024 didn't disappoint. We've had a lot of action. We've had a lot of stocks running. We've had a lot of good paydays. We've had a lot of good lessons, and all of that goes into exactly what we want in 2024, which is getting better each and every day. Also building our accounts. We're here to we're here to propagate revenue, and you have to be able to start with the right game plan at the beginning of the year, right? There is a game plan that is set up for 2024. There are things that are likely that you have to position for now in order to profit from, right? So if you are not positioned, reach out to me via Instagram DM, via email, adam@adamhollandeducates.com, and say, I want to get into the game, right? What do I need to do? Where am I at? How do I need to position, right? You can get educated and implemented a lot faster than you think, right? A lot faster than you think, but it's important to move. It's important to execute. That's the only way that you get the results you're looking to get. So let's make sure that we kill it this year, right? We've had a strong start to the year. Let's keep it up. And everybody have a great rest of the day. I'll see you back here on Monday. Have a good one, everybody.